Welcome everyone to another edition of #RobCo with me and James Wild. Hope you're all well, hope you've had a good week. The weather hasn't been great, but the football season did start, and as James correctly predicted, there was an unlucky Friday the 13th for Arsenal and things didn't go well. What are your thoughts on the opening of the Premier League, and is Kane staying or going?
Yeah, it was a great start to the league. Obviously, a bit of an upset on the opening day, Friday the 13th. Arsenal just went down 2-0 to Brentford, obviously. Some great games over the weekend. We saw Manchester United put sort of 5 goals past Leeds United. Some strong performances from Chelsea, Liverpool. Still a lot of uncertainty from Harry Kane. Is he going to leave? He started training now with the squad, having joined up. Also yet to see some of the big summer signings from Chelsea, Romelu Lukaku, from Manchester United, Rafael Varane, and some of those other ones to make their mark on the league. But good to have the football season back.
Absolutely. And what data we got this week for everyone watching?
So in terms of the data this week, it's been a very positive week. The best sales week we've had since the closing of the higher rate stamp duty threshold incentive there. So we had weekly sales 162 for the past week, Rob, and as you mentioned last week, we heard a lot of communication dialogue from agents that there was more stock coming on. They've got sales that were just sort of bubbling away, yet to exchange and complete on. So a little bit of our sort of activity in the market, some of our discussions that we hold sort of coming to fruition this week in terms of those sales. In terms of other numbers, we are down this week, one of the lower weeks in terms of new instructions, only at 240 new instructions this week. So that supply shortage here in London just coming through there.
I think what's worth noting though is at 200, it's our strongest under offer week in recent times, and that obviously is a massive lead indicator into the sales that are about to come. So the strongest under offer week in over a month, and that will obviously lead to strengthening of the sold position in the coming weeks.
Definitely, Rob. Like you say, 200 under offer, which is great news for the market. Slightly constrained on supply. Fall through rates in the last month or so have sort of hovered around the sort of generally around the 40 mark. We're up to 48 this week, so we would expect a lot of those 200 under offers to come through and transact in the next few weeks. So hopefully quite a strong pipeline in terms of sales. We're getting to some sort of stabilisation in terms of the market, which generally sales were 150 mark, and they've been subdued somewhat since the start of July.
I think anyone who's watching, who's following the data and the graphics that we're sharing, and again, if you're not, please contact us. We'll make sure you're on our newsletter and data list. The dramatic decline in those charts that we're sharing of those sales numbers over the last 5 weeks, it really is a cliff edge fall, which is so perfectly shown in the graphics. At the same time, all of the historical major date events relating to stamp duty and stimulus over the last 20 years have followed a similar sharp cliff fall decline, to which that's no surprise, and that's what we were sharing with everyone. And now it's how quickly it gets back to a maintainable level of transaction that I think will take another 3 to 4 weeks. Somewhere in mid to end of September, you'll start seeing the sales reach a maintainable level, and that's where we're seeing the market going at the moment. Week by week, it's just creeping up, and our graphics really demonstrate that.
Yeah, I think that takes us on quite nicely, Rob, to some data which Rightmove have put out this week. And in terms of Rightmove data, they've said that property asking prices have fallen for the first time this year. So just a slight slowing in the market, which obviously has been sort of slightly reported. However, I think it's just the market more so adjusting to those slightly higher purchase costs, with stamp duty obviously now being payable for a lot of transactions. Rightmove have gone on to say, they're experts there, that they are anticipating an autumn bounce in the market, which we've been commentating on, that sort of September-autumn period. We were predicting autumn bounce in prices and activity, and I think this is going to be largely fed off demand, possibly outstripping supply. So a little bit of something to watch there. But if you reflect on the data on an annualised basis, asking prices are still higher than they were 12 months ago, despite them just falling very slightly in the last month.
I think what is interesting is we talked a lot over the last year about the whole chain in the process of buying, whether it's agents, then conveyancing, then valuation surveyors, then the bank, the sanction, the mortgage offer, etc. And now what we're seeing is those timelines have come right in. If you remember when we were monitoring average time periods for the transaction to go through, and it was, you know, creeping up to something like 10 or 12 weeks. I think what you're going to see now is, because of the pressure being taken away from all of those involved in that supply chain, I think you're going to get back down to the 6 to 8 weeks because of the less volume, searches coming in quicker, and conveyancing and surveying and mortgage offers are able to happen quicker. So I think that's a positive news for the marketplace. Anyone that's trading, transacting, or looking to get deal flow through, it's really good to know that the supply chain and all the people within it are now able to operate a lot quicker and move a lot faster to ensure speed and efficiency happens.
I definitely agree with that, Rob. I just wanted to comment just briefly on buyer trends in terms of the last 12 months, which we've had an unprecedented market, really. It's been a flow of activity, a very hot market, and just in terms of how buyers have looked to sort of acquire property and what's changed really from recent times. Many buyers have missed out on properties through being gazumped or having non-proceedable offers or sort of chained offers. So I think many buyers that we've seen have chosen to actually sell first, then they're in a very proceedable position, you know, to offer on property. And everything in the last 12 months or so has been speed related, like you say, Rob. People want to get things over the line, and they wanted to be able to realise those stamp duty threshold savings, and also in terms of the bidding process for bidding on properties, people have been, you know, starting off at asking price, then going sort of best and final offers. So the whole sort of bidding process, buyers acquiring property here in the last 12 months, has almost completely gone on its head. Yeah. And so we're just going to see if that resets as the market stabilises in these next few months.
Great. Any other news for this week, James?
Yeah, in terms of the fiscal news and in the UK economy here, unemployment rate, this has fallen to 4.7%, which I think is a big positive. And further positive news, UK inflation has slowed faster than expected to around 2%, which got released just today, actually. And then in terms of the sort of pressures on inflation, we've had some upward pressures coming from transport. Obviously, a lot of the sort of fare rises we've seen in train and rail fares, along with prices of cars in terms of chip shortages, especially for those second-hand cars, been upward pressure on pricing, whilst the downward pressure has come from sort of a lot of clothing and footwear prices as we sort of move into the summer sale season. Just a quick comment on terms of the inflation, and some of the sort of chief UK economists and speculators have aired concerns that inflation could still rise to around 4% later this year, with July's figures seeing a slight decline. However, what they're saying is that a lot of the prices at the moment being compared on an annualised rate 12 months ago came at a time when a lot of prices were falling. So there is still still room for inflation to rise as they are commentating. So something we'll have to keep an eye on in the later half of 2021.
Yeah, I think what's important is if inflation is managed, it will put less pressure on the Bank of England to increase interest rates like we discussed last week. And if that isn't manageable, then that mechanism will be used to manage fiscal policy. And that could have a knock-on effect, as we said, on the wonderfully attractive mortgage market and some of the really exceptional offers that are currently out there to reflect where interest rates lie currently.
Definitely. Just in terms of mortgage rates, Rob, we've reported a lot of news in the last 12 months. We've had extremely competitive mortgage deals out there. However, in terms of the longevity of these deals and the deals they put out to the market for consumers, it's often that these deals, in some instances, they're only lasting around 3 weeks as the quota or the take-up for the mortgage is filled. We just wanted to sort of bring you that news. And obviously, the buying process, obviously longer than 3 weeks. So along a lot of buyers' chains, they might actually change their provider along the way as different deals are put out there to the market. I mean, it's sort of somewhat ironic that the sort of lead-in period is only sort of 3 weeks in some instances, but it's sort of a 35-year commitment in terms of their lending to the borrower. These ultra competitive mortgage deals, they've been fueled by a rate war between a lot of the lenders and the banks, who are, they're trying to court low-risk customers by offering loans ever cheaper rates with borrowers which have large deposits. They're trying to keep those LTVs low, which is facilitating these competitive mortgage rates.
Brilliant. That's all great. Great update, James. Anything else for us this week before we close off?
No, just to give you the cheapest rates out there at the moment. In terms of Halifax at the moment, 0.83% on a 2-year fixed is the current lowest. Absolutely staggering, that 0.83%. It does, however, come with a fee of £1,500. So for those that are borrowing quite sort of the lower end of the spectrum, it can work out more expensive than a higher rate mortgage.
Brilliant. Great data, great intel as always, James. Thank you all for continuing watching, supporting all the social media, all the platforms, LinkedIn, YouTube, and the podcast for everyone that's downloading it week in, week out. We wouldn't be here without you. Keep supporting, keep reaching out, keep asking questions, keep demanding that we provide you with all of the intel, all of the knowledge, what's happening on the ground in the property, finance, lending market, and obviously all those valuation updates that we are feeding you. Please take care, everyone. Please look after yourself. Enjoy the remainder of the week and the weekend, and we will see you and speak with you all next week. Take care, everyone. Thanks, James.
Thanks very much, everyone.